Under GST law, composition levy scheme is a simplified method of levy of tax designed for small taxpayers whose annual aggregate turnover AATO is up to Rs 75 lakh in 8 specified states or Rs 1.5 crore in other states for supplier of goods and annual aggregate turnover of Rs 50 lakh for exclusive supplier of services. The composition levy scheme aims to bring simplicity, ease the compliance burden for the small taxpayers. Under this scheme, a registered taxpayer has to pay a small percentage of his annual aggregate turnover as tax on a quarterly basis. Such a taxpayer does not have to maintain elaborate records and has to file a simple annual return in Form GSTR 04. To determine your eligibility for registration under the composition levy scheme, firstly, you need to calculate your annual aggregate turnover. Turnover of all businesses with the same PAN has to be added up to calculate turnover for the purpose of the composition scheme. It is the sum of value of all outward supplies falling in the following categories: taxable supplies, exempt supplies, but excludes the value of inward supplies on which tax is payable by a person on reverse charge basis and taxes including cess paid under GST law. The value of exempt supply of services provided by way of extending deposits, loans or advances insofar as the consideration is represented by way of interest or discount. Registration under GST law is compulsory for opting for the scheme. A new GST registration applicant may opt for the scheme by providing necessary information under Part B of Form GST Reg 01. Any registered person who wants to opt for composition levy has to file GST CMP 02. This can be done online by logging into the GST portal. This intimation should be given before the beginning of the financial year. The intimation once filed for the scheme would remain valid as long as the taxpayer is eligible for the composition scheme under GST. A composition taxpayer is required to pay tax at a special rate on total value of supplies. For an eligible manufacturer, tax at rate 1%, 0.5% CGST and 0.5% SGST or UTGST of annual aggregate turnover is payable. For an eligible person engaged in making supplies mentioned in Clause B of Para 6 of Schedule 2 of the CGST Act, like a provider of restaurant service, tax at rate 5%, 2.5% CGST and 2.5% SGST or UTGST of annual aggregate turnover is payable. For an eligible supplier, that is, traders, tax at rate 1%, 0.5% CGST and 0.5% SGST or UTGST of annual aggregate turnover is payable. This scheme is also available for an eligible service provider where tax at rate 6%, 3% CGST and 3% SGST or UTGST of annual aggregate turnover is payable. Tax liability under the composition scheme needs to be paid on quarterly basis via Challan CMP 08 by the 18th of the month following the relevant quarter. There are certain conditions which have to be adhered to by a person opting for the composition scheme. A taxable person opting for the scheme has to issue a bill of supply as he is not eligible to issue taxable invoice under GST. He has to mention the words composition taxable person, not eligible to collect tax on supplies, at the top of every bill of supply issued by him. Such taxable person is not eligible to claim input tax credit on purchases. He needs to mention the words composition taxable person on every notice board or signboard displayed at the prominent place at his every place of business. Certain restrictions are also to be adhered by composition taxpayers. He cannot make any interstate supplies of goods or services. Such taxpayer can also not make supply via e-commerce operators, who is required to collect TCS. He can neither be a casual taxable person nor a non-resident taxable person. A person whose aggregate turnover exceeds the specified eligibility limit, or in case he wrongly opts this scheme, has to opt out of the composition levy scheme by filing an intimation for withdrawal from the scheme in the form GST CMP 04 within 7 days from the day on which the threshold limit has been crossed. After opting out of the scheme, like a normal taxpayer, he has to pay tax as normal taxpayer, issue tax invoice for every taxable supply made, and is eligible for input tax credit thereafter.